Good evening, ladies and gentlemen. This is Ratan Goel, Chartered Accountant from Jaipur, the moderator of this webinar, today's webinar, being organized by the CP Committee of Institute of Chartered Accountants of India. I'm delighted to welcome you all to the first webinar of this council years, that is 2025 to 29. This webinar is being organized by Institute of Chartered Accountant under aegis of the CP Committee, Continuous Professional Education Committee. And we are pleased to announce this kind of webinars, the webinar series throughout the year on every Friday at the same time. So please block your calendar on every Friday here on from next week to get inside of various emerging and high-value technical topics. Friends at CP Committee, I would like to brief you about the CP Committee function. At CP Committee, we believe in a continuous education program, and continuous education program is the lifeblood of any professional, be it a professional accounting profession, be it a medical profession, be it engineering profession. So this series are being organized to update our members, to update the chartered accountants in tune with the changes, modification, amendment taking place in the environment. The CP Committee believes the world of commerce and world of taxation are changing and changing very, very, very fast. And the CP Committee also believes that a chartered accountant not only to educate his client with respect to the various tax laws procedure, but at the same time, he has to be a continuous learner. A continuous learner to keep himself in the tune of changes, modification, amendment taking place in the commercial and taxation world. We have witnessed the GST regime has been changed in 2017. Now the Total Income Tax Act, which is 63 years old, is being changed by the government of India. So to keep our member updated in the changes and modification taking place in environment, the CP Committee is dedicated to update our members through these kind of webinars, and believe that these kind of webinars achieve their goals to keep their members updated. Today, we have this webinar on the two subjects. First is IndAS 115, and second is recent Supreme Court judgment under GST Act and their impact. We have two speakers. One is Mridul Mehta ji, Chartered Accountant from Jodhpur, who will enlighten us on IndAS 115, and second, Advocate Sri Jatin Harjai ji from Jaipur will be enlightening us on the latest Supreme Court judgment and their impact to the profession. To welcome you all, friends, I would like to invite Honorable Chairman of the CP Committee, Sri Satish Kumar Gupta ji. But before I invite him, I would like to brief you about C.A. Satish Kumar Gupta ji. C.A. Satish Kumar Gupta ji as a Central Council member of Institute of Chartered Accountants of India for term 2025-29, and has served as CCM earlier also in term 2020-2022. He currently serves as the chairman of the CP Committee and has been the chairman of SMP Committee of SAFA and CSR Committee in the past. He has served several honorary awards. He has received several honorary awards such as Excellent Branch Award and Special Silver Seal Award during his chairmanship of Jaipur branch of Institute of Chartered Accountants of India. Best Member of the Year 2004 award also. He has written number of papers and has delivered lecture in different seminars, RRCs, webinars on the topic like income tax, GST, income tax assessments, reassessment under Income Tax Act. So I would like to present before you to welcome all of you, CA Satish Kumar Gupta ji. I would request Satish Kumar Gupta ji to kindly address our honorable members.
Thank you, Ratan ji.
Gupta ji.
Thank you, Ratan ji. I welcome CA Mridul Mehta ji, CA Jatin Harjai ji in this CP webinar. And friends, I also welcome my dear friends who in a big number has joined this for this webinar. Friends, as rightly told by Ratan Goyal ji that it is the endeavor of CP committee to update our members about the recent developments into various fields of practice. And today's sessions are very important. Very important if we talk about the IndAS 115, which will be taken by my brother CM Mridul Mehta, who is a renowned faculty on the IndAS and doing a great contribution for the profession in this field. And another topic, the recent Supreme Court judgments and the impact on the practice of the professionals will be taken by my another younger brother, CA and advocate Jatin Harjai ji. And I think both the chapters, both the topics will take care of your thrust to the knowledge. And you just can imagine that India's 115 lays down the principles that how to recognize, how to measure, how to disclose in respect of revenue from contract with customers, and what are the exclusions out of this. So I think Mridul Mehta ji will take this particular topic in such a way that you would definitely understand that what does this standard speak about. And friends, we all know that standards have a great role in the field of accountancy and auditing, particularly in our life, because we do come across accounting standards and standards on auditing day and out. And believe me, friends, the days have gone when there were no knowledge of accounting or auditing standards, or we were doing the work. Now we will have to be very careful while auditing the accounts, while dealing with the accounting, that whether the accounting standards or the standards on auditing have been followed by or not. Whatever the problems are coming to the our lives of professional chartered accountants is just because we are not following the accounting auditing standards and we are not taking care of the accounting standards. So I think Mridul Bhai will take care of this IndAS 115, and I personally believe that this is going to be a wonderful session because as I already told that it is very important for all of us. The second session would be taken by the Jatin Bhai, and Jatin Bhai has a great footprints in the field of GST. We are seeing him regularly that he is doing wonders. He is arguing a lot of cases in different courts on the GST, and I think he will listening him and listening Mridul will be a nice experience today. I don't want to take much of your time because we all are here to learn. So I would request Ratan Bhai to proceed for the learning session and request Mridul Bhai for the session. Thank you. Thanks a lot, Ratan Bhai. Thanks a lot, CP committee. Thanks a lot, Deepika and other team who are taking care of this session, and thanks the technical team who is taking care of technical side of this session. Thank you very much. Thanks a lot. All the best.
Thank you, Sir Satyenji.
Thank you so much, sir.
Thank you so much for your word of wisdom. Really, days is gone when we are practicing without the standards and everything. Nowadays, the technologies are taking place in the environment, and the ABCD of the study is also being changed. Not A is not Apple, A is now artificial intelligence, B is not book, B is now blockchain, and like that. So we are here to update ourselves with the help of Mridulji, who will tell us about the IndAS 115, recognition of revenue under contract. But before calling him to address our great audience, I would like to brief about Mr. Mridul Mehta ji, who is from Jodhpur, as a qualified chartered accountant, recognized for his excellence in the field of accounting, auditing, and financial management. He has been a part of the risk and assurance team at one of the prestigious Big Four consulting firm where he honed his expertise in financial reporting, auditing, and risk management. After establishing a strong foundation in the corporate sector, he transitioned into the academia, where he is currently serving as an associate professor for accounting and post management at London University. He is also a respected guest lecturer for auditing and assurance at one of the renowned university in Jodhpur. He is a recognized career counselor by Institute of Chartered Accountants of India. He helps students and young professionals navigating the complexities of the CA profession, offering mentorship and guidance on the professional development, exam preparation, and career opportunities in accounting and finance. He also regularly participate in the seminar, webinar, and conferences, workshops, where he shares his knowledge and experience with the student, professional, and industry experts. With this background, I would like to present CA Sri Mridul Mehta ji to guide us, to enlighten us, to take us in the intricacies of provisions of IndAS 115, recognition of revenue. Mridul Mehta ji, please.
Thank you so much, CA Ratanji Goyal. I am very, very privileged and humble. It's always feel privileged and loved to be a part of session organized by Institute of Chartered Accountants of India. It's like coming home back. We are often delivering lectures at various universities, but whenever the opportunities comes to us by ICI, it always feel like we are coming back to our home place. So thank you so much for your warm welcome, Ratan sir. And I would like to extend my heartfelt thank to the President of Institute of Chartered Accountants of India, Shri C.A. Charan Jot Singh Nanda ji, the Chairperson of CP Committee, C.A. Satish Kumar Gupta ji, for giving me this wonderful opportunity to provide my session on IndAS 115, Vice Chairman C.A. Vishnu Kumar Agarwal ji, for providing me this platform. So, I would like to start my topic on IndAS 115. Let me share my PPT with you. Please let me know whether it's visible or not.
Yeah, visible. It's visible.
Thank you so much, sir. So let us begin with most important and most significant accounting standard, which is called as IndAS 115, revenue from contract with customer. What is this standard is all about? This standard is all about how to recognize revenue in context of business operations. So what is this standard? How to recognize? We have previous standards also with respect to revenue identify करने के हमारे पास पिछले कई सारे standards थे, जैसे accounting standard 9, accounting standard number 7, accounting standard number 19, lease contract, construction contract, and other than lease and construction contract, we have accounting standard 9 as well. What is the difference that comes across from AS to IndAS? Accounting standards work mainly on US GAAP, that is General Accepted Accounting Principles, whereas when we convert into IndAS, they are more aligned with financial reporting, that is financial reporting in reference to IFRS, International Financial Reporting Standards. So अभी हम ट्रेडिशनल अकाउंटिंग मेथड से शिफ्ट हो गए हैं फेयर वैल्यू अकाउंटिंग एस्टिमेट्स पे. Scope क्या है इस स्टैंडर्ड का? What is the scope of this standard? The standard applies to all type of contract with customer except the following: lease contract within the scope of IndAS 17. IndAS 17 lease contract के लिए एक अलग accounting standard है IndAS 17. Insurance contract within the scope of IndAS 104 insurance contract. Financial instrument other than contractual right or obligation within the scope of IndAS 109 financial instrument IndAS 110. and non-monetary exchange between the entities in the same line of business to facilitate sales customer or potential customers. For example, this standard would not apply to a contract between two oil companies that agree to exchange of oil to fulfill demand from their customer in different specified location on timely basis. Means a standard is not talking about exchange of goods or services between two same line of business. It is strictly talking about contract, that is a prudent customer client relationship, supplier client relationship. So these four are not applicable on this standard. How to recognize revenue? Our IndAS provide a wonderful five-step model to identify and recognize the revenue. IndAS 115 provide a single comprehensive framework for revenue recognition, replacing multiple standards. It follows five-step model to recognize revenue based on transfer of control rather than transfer of risk and rewards. Previous standards always talk whenever we transfer our risk and rewards, we have to recognize the revenue. But IndAS 115 does not talk about only risk and reward. It talks if you have transferred your control of your goods or services, then also you are eligible to recognize your revenue. So it's important in this IndAS, and this is the beauty of this accounting standard, that what is control, transfer of control, and how it is different from transferring of risk and reward. That we will understand in our next slides. So this standards mostly work on this five-step model. Now, what is this five-step model? So step one, we have to first identify the contract with customers. This is the first and the primary step. If we fail to fulfill the step number one, we cannot go beyond that. So step one is the most significant and important step. If there is no contract with the customer, this international accounting IndAS is not applicable at all. So step one, identify the contract with customer. Then we have step number two, identify performance obligation. This is the most significant part of this IES. Identify performance obligation, that is promises to deliver. Then we have to determine the transaction price. In layman's language, we can call it as an expected consideration. Then allocation of transaction price. Now the question here is why it is important to allocate transaction price. Because in step number two, in single contract, if we have more than one performance obligation, if we have promises more in single contract, if we are promising deliver more than standard, if I can say, for example, if I want to purchase a lift and I want to install that lift, so my seller gives me a lift, my seller also provide me the installation services, and my seller also provided me with the 5-year maintenance services. So this international accounting standard says that in single contract, you are promises to deliver three performance obligation. You will deliver the lift, you will install the lift, and you will also going to provide the maintenance services for next 5 years. So this international, and the beauty of this international accounting standard is this only: whenever a seller or supplier promises to deliver more than one performance obligation, in that case, we have to identify whether they are more than one performance obligation or there is a single performance obligation. If there is more than one performance obligation, then the consideration is need to be allocated over the performance obligations. So step number three is determine the transaction price. Step number four is allocation of transaction price. And lastly, on the basis of allocation of transaction price over the performance obligations, we will recognize the revenue. It may sounds very technical when I'm saying first, but when we proceed with the slides, you will understand the significance of these steps. Now let us break down revenue, contract, and customer. The three words has been used in this internet IndAS: revenue, contract, and customer. So what is revenue? Revenue means sale of goods or provision of services in ordinary course of business. That means this standard is not applicable if I sell my non-current assets, because there is a separate IndAS 16 on that. If I'm doing leasing contract, this is also not covering by this IndAS. This has been separately covered by this IndAS. So revenue is strictly applicable on sale of goods or provision of service in ordinary course of business. Contract. Contract means an agreement between two or more parties which create an enforceable right and obligation. The seller must have right and obligation, and the buyer have also that right and obligation. The seller has right to collect the consideration, and he has an obligation to provide the goods or services which is obligatory to do so. whereas the buyer has right to receive the goods and service and obligatory to pay the consideration. So this is a contract, and contract is always be called as contract if it is enforceable by law. Who is customer? कौन होता है customer? Customer is a party that has a contracted with an entity to obtain goods or services that are output of the entity's ordinary course in exchange for the course of business. That means a final goods or services provided by the entity. So those who are eligible obtain goods or services from that entity in the ordinary activity, in the ordinary course of business in exchange for the consideration is my customer. Now, how to identify the contract with customer? It is very important. The first step, how we will identify whether there is a contract with customer or not. So there are 5 conditions to identify whether there is a contract or not. What is the condition number 1? The condition number 1 is all parties must approve the contract and they are committed. So approved, there can be an implied contract, there can be an explicit contract, but there must be an approval, means there is an offer and acceptance. Condition number 2, they can identify each party's right regarding goods and services to be transferred. Condition number 3, there must be a identified payment terms. The payment terms must be clear. A contract without identifying payment terms cannot be called as contract because there is an essence of consideration to be put into contract. Condition number 4, it must have a commercial substance. Commercial substance means there should not be any transferring of goods or services so as to, this IndAS emphasized that there should not be an arbitrary inflation of revenue. The revenue must be real, so there must be a commercial substance. Mere transferring of goods or services from one supplier to another supplier may not be covered under contract with customer. And 5th, there must be a probable. Probable means the chances of receiving is more than 50%. So there must be a probable that entity will collect substantially all consideration. That means there must be a certainty of realization. So this is contract. So all parties must approve. There must be a right and obligations for each party. Payment terms must be identified. There must be a commercial substance, and there is a probability that all the consideration will substantially received. Now, second and the most important part of this IndAS, that is identify performance obligation, promises to deliver. आपने एक कॉन्ट्रैक्ट में अगर एक से ज्यादा वादे किए हैं तो दे आर मल्टीपल परफॉर्मेंस ऑब्लिगेशंस. अगर आपने एक कॉन्ट्रैक्ट में एक ही चीज डिलीवर करने का वादा किया है तो इसे सिंगल परफॉर्मेंस ऑब्लिगेशन बोलते हैं. इफ यू प्रॉमिस टू डिलीवर मोर देन वन services or goods, they are called as multiple performance obligation. Whereas if you promise to deliver only one promise to deliver, then it is called as single performance obligation. What is the need to identify various performance obligation? So as to allocate the transaction price among the performance obligation, and later we will recognize the revenue for the same. So in cases where multiple goods or services are promised in a single contract, entity shall identify whether they are more than one performance obligation. Let us see an example. Promise in a single contract to provide a software, installation of that software, and provide 3 years maintenance and technical support. So technically, the supplier is not only supplying the software, but he's also promised to do installation, and he is also promised to give 3-year maintenance and technical support to us. So technically, there are 3 performance obligations. Now, performance obligation, how to distinct whether it is a single performance obligation or it is a multiple performance obligation. So we have divided the goods or service into 2 parts. If goods or service are distinctly identifiable in a single contract, अगर मेरी वस्तु एवं सेवाएं अगर अलग से मैं आइडेंटिफाई कर पा रहा हूं एक ही कॉन्ट्रैक्ट में, तो उसे मैं मल्टीपल परफॉर्मेंस ऑब्लिगेशन बोलूंगा. इफ गुड्स एंड सर्विस आर डिस्टिंक्टली आइडेंटिफाइबल, then it is called as multiple performance obligation. If goods and service are not distinctly identifiable in single contract, then it is called as single performance obligation. Single performance obligation means when I am not able to bifurcate my goods and services. But if I'm able to bifurcate that I am getting this services, this goods and services, if these are distinctly identifiable in single contract, then it is called as multiple performance obligation. Now, this is the challenge in this IndAS. whether the goods and services are distinctly identifiable, how to identify whether goods and services are distinctly identifiable. ऐसा क्या तरीका है जिससे हम ये पता कर सकें कि गुड्स और सर्विसेज को हम अलग अलग देख पा रहे हैं. अगर हम गुड्स और सर्विस को अलग अलग देख पा रहे हैं, इफ वी आर एबल टू सी गुड्स एंड सर्विस डिस्टिंक्टली, देन ओनली वी विल कॉल इट एज अ मल्टीपल परफॉर्मेंस ऑब्लिगेशन. इफ वी आर नॉट एबल टू सी गुड्स एंड सर्विस डिस्टिंक्टली, भले ही अलग अलग गुड्स एंड सर्विसेज मिल रही है लेकिन हम इनको एक ही देख पा रहे हैं, तो ये एक सिंगल परफॉर्मेंस ऑब्लिगेशन है. अगले स्लाइड पे जाने से पहले, बिफोर प्रोसीडिंग टू नेक्स्ट स्लाइड, आई एम गिविंग यू सिंपल एग्जांपल. Let us understand. I go to a restaurant and I ordered a la carte food. For example, I ordered chapati, I ordered sabji, I ordered salads, and I ordered starter. So if you see, this a la carte is identifiable as a distinct goods and services. How? The chapati is a separate goods I can purchase separately. The vegetable which I ordered, I can purchase separately. The salad which I ordered, I purchase it separately. Means they all are distinct in nature. But when I'm ordering a meal, in meal we have rice in it, we have chapati in it, we have sabji in it. So see, in both the examples, everything is same. But in a la carte, we are distinctly identified our goods and services. But in meal, we called it as a not distinctly identifiable. So a thali, a meal, is a single performance obligation. But when we are ordering separately all the item, they are called as multiple performance obligation. This is a very layman's example. We will understand more examples in next slides. But this is how we have to. So this is a subject matter of identification. A person can identify goods or services as a separate performance obligation based on their needs and requirement. And at the same point of time, another supplier can identify that goods and services not distinctly identifiable and treat whole as a single performance obligation. So what is the major, what is the how to identify whether goods or services are distinctly identifiable or not? There are two criteria that need to be met. First, if goods or services are capable of being distinct, अगर goods और services अलग से identify होने के काबिल है, तो what are the measures? First, customer can benefit from individual goods or services on its own. Customer can benefit from individual goods or service on its own or together with other readily available resources that can sold separately. Example, when we obtain internet services along with OTT subscription. So internet services in its own a separate service, and we can also purchase OTT subscription separately. So these are two distinct services which is bundled together to provide the services. That means whether it is a different performance obligation, separate performance obligation, or multiple performance obligation. So if it is distinctly identifiable, that means customer can get benefit from individual goods or service on its own, then it should be treated as distinct goods or services. But now the challenge is end part. Separately identifiable from other promises in the contract means they should not be significant integration services should not be provided. We will understand in next slides what is significant integration services. So goods or services are capable of distinct if it is benefited individually and it is readily available resources. But we have to check second condition also. It should be significant integration services not provided. One goods or services not significantly modify or customize other goods or services, and goods or services are not highly interdependent or interrelated with each other. भले ही मुझे ऐसा लग रहा है, even if I am thinking that this goods and services are distinct, but they are significant integration services are provided. Means एक दूसरे के बिना अगर काम पूरा नहीं हो सकता, तो हम उस सर्विसेज को डिस्टिंक्ट सर्विसेज या गुड्स नहीं मान सकते. One goods or services significantly modify or customize other goods or service, even if goods or services are distinctly identifiable, but we cannot call it as a distinct goods or services because they can significantly modify or customize each other. And third point, goods or services which are highly independent or interrelated, even though they are distinct, but we cannot call it as a distinct. We will treat it as a one single performance obligation. I cannot eat chapati alone. I need that sabji. I need that vegetable. So even chapati is a distinct goods, vegetable is a distinct goods. But when I'm calling a thali, I cannot eat chapati alone. I cannot eat vegetable alone. So this is called as one goods or service significantly dependent or interdependent on each other. Even goods and services are treated or are visualized as a distinct, but we cannot treat it as a distinct. We will call it as a one goods or service, or we can, in technical language, one single performance obligation. Now, what is significant integration services? As per IndAS 115, revenue from contract with customer, a significant integration service occur if the entity combines various elements into single comprehensive solution, making them inseparable. It is treated as one performance obligation. Let us take an example. A company enters into a contract to deliver a complete water purification system that includes engineering and design services, procurement of pump and equipment services, physical construction and site preparation, testing water quality, and then integration of all components. Now, if you see all these services, whether I can call it as a single performance obligation, or I have to call them a multiple performance obligation. If I am saying I want to install a water purification system at my site, can I say only giving engineering and design service will suffice the cost? No. Can I say if I got procurement of pumps and equipment, it will suffice the cost? No. That means all the services are so interrelated and integrated that without taking all the services, without getting all the services done, it is not possible to install and integrate it is not possible to install the water pump or water purification system at the site. So since all these activities are highly interdependent and necessary to deliver a fully operational water purification plan, they are treated as single performance obligation. Under IndAS 115, revenue is recognized over time as the project progresses rather than separately for each component. In layman's language, it is a thali, right? So without obtaining all the services, it is not possible for me or any entity to separately identify all the services. It seems to be separate identifiable services, but this is significant integration services. So it is treated as one performance obligation. And whatever consideration we set, it should be recognized as a water purification plant. We need not to allocate our transaction price to engineering, procurement, physical construction, testing, water integration. No, this should be treated as one. In GST language, we can call it as a composite service or composite supply. It's not a mixed supply. Mixed supply is distinct goods and services, whereas composite supply, where there is one principal supply and there is one minor supply. So it is a composite supply. One goods or services when which is significantly modify or customize other goods or services. As per IndAS 115, when one good or service significantly modify or customize another, they are treated as single performance obligation because they are highly interdependent. In that case also, even if we are getting multiple performance obligation, even if entities promises to deliver promises multiple performance obligation, then also it should be treated as single performance obligation because the goods or services are significantly modify or customize other goods or services. Let us take an example. If we have to customize an ERP system, enterprise resource planning system, to our company, a company contracted to deliver an ERP software that includes software development and customization, integration with existing system, and implementation and training to be given to employees for the users. Now, since the software is significantly modified to meet a specific requirement and cannot function independently, all services are treated as one performance obligation with revenue recognized over time. Next, when the goods or services are interdependent or interrelated with each other. When the goods or services are highly interdependent or interrelated with each other, then also Even if multiple performance obligation has been identified, then also we will consider that single performance obligation. भले ही कई वादे किए गए हैं, लेकिन हम इन सब वादों को एक वादा मानेंगे। जब कई सारी वस्तुएं एवं सेवाएं एक दूसरे पे निर्भर करती है, whenever goods or services are interdependent or interrelated with each other, even we have identified multiple performance obligations, even though we will consider it as a one single performance obligation. As per IndAS 115, goods or services are highly interdependent or interrelated when they are not distinct on their own and must be combined to provide a meaningful output. In such case, they are treated as single performance obligation. I have given an example which is very much similar to water purification, aircraft manufacturing and customization service. An airline contract a manufacturer to build and deliver a customized aircraft that include design and engineering of aircraft, manufacturing of component like wings, engines, and avionics, assembly and integration, that is combining all parts, and customization, installing airline specific setting, cabin layout, and in-flight system, and then testing and certification, ensuring airworthiness before delivery. So even though it is treated as multiple performance obligation to be delivered by airline company, but since all these elements must work together to deliver a fully functional aircraft, they are highly interdependent and treated as a single performance obligation under IndAS 115 with revenue recognition over time. So there are two criteria that need to be made. First, they are distinctly identifiable. Second, there must be a, if goods or services are not highly interdependent or interrelated, then they are treated as a they are treated as distinct identifiable goods or services. If goods or services are highly interdependent, then they are cannot be called as distinct goods and service. They are to be treated as single performance obligations. The fourth and the most important aspect of IndAS 115, that is determination of transaction price. Now, what is transaction price? Transaction price means the expected consideration, the agreed consideration for supply of goods or services. Transaction price is the amount of consideration an entity expects to receive in exchange for transferring goods or services to a customer. ट्रांजैक्शन प्राइस वो कंसिडरेशन है, वो प्रतिफल है जो एंटिटी एक्सपेक्ट करती है टू रिसीव इन एक्सचेंज फॉर वॉट एवर दे आर ट्रांसफरिंग गुड्स और सर्विसेज टू अ कस्टमर. Now, how to identify transaction price? Now, these are some of the components of transaction price. First, there is a fixed consideration, a stated price in the contract that I will deliver it as 1 lakh rupees. So this is a fixed consideration. Second is a variable consideration. Now, variable consideration is depend on future performances. For example, if you deliver me within 5 days or within 5 months or a specific term, then we will give you an incentive. So it is highly dependent on the performance. However, if you fail to deliver within 5 months, we will charge a penalty. So this is also a variable consideration. So variable consideration is a future outcome, whether we are able to perform or we are not able to perform. Now, this IndAS level up by considering variable consideration into the transaction price by adopting fair value accounting estimates. सिर्फ कंसिडरेशन को हमको मेजर नहीं करना है. IndAS 115 stated. Now, the question is how I will identify whether I will be able to perform my contract within time or not within the time. So this IndAS says you have to do fair value accounting estimates, means you have to predict. If you are able to perform your services, you have to add that incentives into your base price. If you think or if you predict no, you cannot deliver that goods or services within that time, you have to adjust your penalties. So variable consideration is subject matter, how you understand your context, your contract with the customer. Third, significant finance component. Whenever we purchase goods or services, we have always provided with a facility of that equated monthly installments, that or equated yearly installments, that is loaning facility. So we have to adjust that interest cost, because whatever I receive a year After a year or after 2 years or after 3 years, it always includes a component of interest into it. So this IndAS is very specific with respect to principal component and bifurcation of interest component. Principal component should be treated as consideration, whereas the finance component, the interest component, should be separately treated, and it should be recognized as interest income and not as revenue from operation. Non-cash considerations, the payment made in non-monetary form, like shares, goods, or services, to be dealt separately. Now, what should be the consideration of monetary, non-monetary consideration? Then this IndAS says always treat the fair value of whatever you get in exchange of goods and services you have provided. And consideration payable to customer, discount, vouchers, cashbacks, payment, all this consideration which is giving back to customer in form of discounts or cashback or voucher need to be reduced the transaction price. So this is the most technical aspect of this IndAS to identify or determination of transaction price. Now, this theory always, put it's heavy to understand this IndAS 115. In first 8-10 slides, I think it's always heavy to understand the context and theory. So I have given the practical example to understand this IndAS 115. So now let us understand the revenue recognition based on 5-step model for different industries based on practical scenarios. Let us understand scenario. Now I am very hopeful and I am confident that with the scenarios, we will able to understand this IndAS more effectively. Scenario 1, telecom industry. ABC Limited, a telecom company, offers a bundle plan. He is selling a smartphone worth rupees 30,000. Along with this, he is providing a 12-month prepaid mobile plan worth rupees 12,000. एक कंपनी ने मुझे स्मार्टफोन बेचा 30,000 का, उसके साथ साथ उसने मुझे 12 महीने का प्रीपेड मोबाइल प्लान दिया 12,000 का. ठीक है. अगर हम इंडिविजुअल प्राइसेस देखें, if we see the individual prices of both smartphone and 12-month prepaid mobile plan, it comes to me 30,000 plus 12,000, that is 40,000. But when a company giving a bundled offer, a bundle services, a composite supply, he is charging total price 36,000. So the question is, transaction price should be treated as 30 plus 12, 42,000 or 36,000. The transaction price is always the price which is charged by the supplier. So here in this question, we have to identify the contract. So if you see, first, is there is a contract, so we have to go step by step, the 5-step model. Identify the contract. The customer signs a 12-month contract with ABC Limited. Identify performance obligation. So there are two performance obligation. We can distinctly identifiable goods and services, and there is no significant integration. There is no, one goods or services are not interrelated with each other. So these are the two performance obligation. One, selling of a smartphone, and second, providing recharge, that is telecom services over 12 months. What is my transaction price? Transaction price is 36,000 upfront. Now, how we will allocate this transaction price? The standalone price of phone is 30,000 and mobile plan is 12,000. So total standalone value is 30 plus 12, 42,000. But how much we have received? We have received only 36,000. So how we will allocate? So phone, can I say phone worth me 30,000? So out of 40,000, total 30,000 is of cost. But how much consideration I have received? 36,000. So can I say whatever consideration, that is transaction price I have received, is to be allocated on the basis of standalone price. So 30,000 and 12,000 is to be considered as ratio of allocation. So 36,000 is to be allocated among phone and telecom services. So 36,000 out of 42,000 multiply by 30,000, I have recognized the revenue of 25,714 of phone and telecom services. Similarly, 12,000 of 42,000 multiplied by 36,000, I got the value of 10,286 for telecom services. So this is how we have allocated the transaction price on the basis of or in the ratio of standalone value. Now, how we will recognize the revenue? It is simply application of principle of matching. So 24,714 is recognized immediately when the phone is delivered because control has been transferred. Whereas 10,286, this telecom services is to be provided over 12 months. So 10,286 is to recognized over 12 months, that is 857 per month as telecom services is provided. So this is, I hope you understand how to apply this 5-step model. So what are the key takeaways? Revenue is always split based on fair value of separate obligations, that is performance obligation. Unlike old methods where revenue was recognized as invoice amount, that is 36,000, we recognize 36,000 as a sales value. But no, this IndAS 115 ensures proper revenue allocation. It helps in transparent financial reporting by showing accurate revenue from different obligations. Scenario 2 of real estate industry. XYZ developer is constructing an apartment complex and sale unit before completion. Price of each unit is considered as 50 lakh. Agreement signed on January 2025. Possession is to be given in December 26, means after 2 years. Payment is scheduled as 25% upfront, 10 lakh on booking, 80% 40 lakh in installment during construction. Construction progress is evenly spread over 2 years. Now, let us do step-wise application of this question. Identify the contract. Customer signed an agreement to buy an apartment. Okay. Now, performance obligation. Delivery of fully constructed apartment. This is only a single performance obligation. So transaction price is determined as 50 lakh of fixed consideration. That is a step-by-step application of IndAS 115. Allocate the transaction price. Since it's a single obligation, no need for allocation, means there is no multiple performance obligation. So whatever transaction price is identified, it is to be charged to that single performance obligation only. How to recognize revenue? As per IndAS 115, revenue is recognized over time if the buyer control the assets. Means buyer has right to customization. Even the construction, even the apartment has not transferred to buyer. But since the control has been transferred to buyer, this is the beauty of this IndAS 115. Even if the control has transferred, control of what? The buyer has got right to customize the apartment. And the developer cannot sell it to another buyer once the contract is signed. This IndAS says the seller can recognize the revenue. If this condition are met, revenue is recognized based on construction progresses, which is very much similar to what we call as accounting standard 7 percentage of completion method. So since we have spread evenly throughout the year, so we are assuming that 50% completed by current year, December 25, and remaining 50% is completed by December 26. So 25 lakh is to be recognized as revenue in the financial year 25, and remaining 25 lakh is to be recognized in December 2026. If control is transferred only on handover, for example, if seller does not transfer the control, that means buyer has no right to modify or customize the apartment. In that case, if control is not transferred, then revenue should be recognized fully in December 26 only. So it is very important. The case is one, the case is single only, but the perspective is different. If control has been transferred, then seller can recognize the revenue on the basis of percentage of completion. If the control has not been transferred, in that case, the revenue should be totally recognized when the full furnished apartment is transferred to the buyer. What are the key takeaways? Under IndAS 115, a real estate firm must assess whether revenue is recognized over time or at a point of time. If control is transferred, then over time. And if control is not transferred, then at the time of transferring of control. Old method was accounting standard 7 and 9 allowed revenue recognition based on whatever percentage of money we have received. IndAS 115 focuses on control transfer. It improved transparency in financial statement, ensuring revenue is not overstated before work completion. Let us take example of software industry. ABC Software Limited sales enterprises software with 1-year license and customization service. Contract is signed on April 1, 2025. Now, companies promises to deliver software license, which is pre-packaged software of rupees 5 lakh. They are also promised to give customization service, which will be worth rupees 2 lakh, and an annual maintenance support 1 lakh. So if we can see, there are three performance obligations we can identify. One is of software license, 5 lakh. Then there is a service of customization, and there is one more service, annual maintenance support of 1 lakh. 5 plus 2, 7 plus 1, 8. So we are getting 8 lakh of services or 8 lakh of performance obligations from the software, ABC software. But the total contract price, the bundle price is 7 lakh. So can I say the transaction price is 7 lakh? And since we have identified three performance obligation, this 7 lakh is to be allocated on the basis of 5 lakh, 2 lakh, and 1 lakh. So customization to be completed in 2 months. So how we will identify? So identify the contract. ABC software align a contract with a client for software customization and support. So this is a contract between company and client. Identify performance obligation. There are three performance obligation which we have identified: software license, right to use that software; customization service, they are allowed to customize tailoring the software as per client needs; and annual maintenance support, that is a annual maintenance or technical support for 1 year. Transaction price is not 8 lakh, because what is agreed price is 7 lakh. So 7 lakh is my transaction price. Now, how will I allocate? So software license, can I set software license 7 lakh is to be allocated on the basis of standalone price. That is 7 lakh is to be allocated on the basis of 5 lakh divided by 8 lakh. That means 5 lakh is not revenue for software license. It is 4.375 lakh. For customization service, we have received 7 lakh out of 8 lakh. So for 2 lakh, the customized service, the revenue should be recognized rupees 1.75 lakh. And for annual support service, instead of 1 lakh, we will only recognize 0.875 lakh. So technically, we have spread our transaction price among various performance obligations according to standalone prices. How we will allocate? So can I say this? Oh, sorry, this is copy pasted. So fifth, revenue recognizing of revenue, software license, it should be recognized immediately because control has been transferred. Customization service, it should be recognized over 2 months because company can customize over 2 months. So technically 1.7 lakh is to be recognized over 2 months. 50% in first month and second 50% in next month. And third, annual support service, since it is for 12 months. Annual support services, 0.875 lakh is to be recognized over 12 months, April, May, June, July till March 2026. So this is the beauty of this IndAS, where we have identified. This is the beauty of IndAS 115, where we have identified multiple performance obligation and we allocate transaction price. And on the basis of identification of each performance obligation, recognition of revenue is now filtered down to match, to align with matching principle. What is the key takeaways? Different components of contract are recognized separately based on performance obligations. License revenue is recognized at a point of time on delivery. Customize is recognized over the time it takes to complete, and annual support is recognized evenly over the contract terms. Old standard, that is accounting standard number 9, would have allowed recognizing revenue upfront. जितना मिला उतना recognize करो, AS9 कहता है, because वो invoice value पे चलता. But IndAS 115 ensures proper allocation. Accounting standard और IndAS में यही एक फर्क. Accounting standard invoice value पे recognize करता था. कितना पैसा आया, हमने क्या obligations दिया, performance obligations. There is no such terms in accounting standards. Whatever revenue we have received or we have accrued, we have accounted for, irrespective the time of allocation. There is no term called performance obligation. There is no term called allocation of performance obligation. So revenue is recognized based on accrual principle, but this IndAS recognized in more filtered way. Scenario 4, subscription services like OTT form. Like XYZ Streaming Limited offers a 1 year OTT subscription with a discounted smart TV bundle. Now, they are providing two performance obligations. They are providing 1 year OTT subscription Along with, they are offering a smart TV bundle. If I'm taking a more simple example, Geo is giving a phone with Geo internet services and Geo calling services with it. So annual subscription fee is rupees 6,000. Okay. The TV worth me 24,000 if I purchase distinctly. अगर मैं इसको अलग से परचेज करने जाता तो मुझे टीवी 24,000 का और एनुअल सब्सक्रिप्शन फीस 6,000 का. Bundle price TV plus 1 year subscription cost me 25,000. So my transaction price would not be 24 plus 6, that is 30,000. My transaction price, my consideration will be 25,000. So subscription starts immediately and TV is delivered upfront. Okay. Now, let us do step-by-step application of IndAS 115. Identify the contract. A customer subscribe for 1 year streaming services and get a discounted smart TV. What are the identified performance obligation? There are two performance obligation. There is a smart TV delivery, control transferred immediately, and there is a 1 year OTT subscription, that is services provide each month. What is the transaction price? The total contract price paid upfront, that is 25,000. Now, since 25,000, there is no one performance obligation. There are two distinct performance obligation. So this 25,000 is to be allocated to TV and to OTT subscription. How we will allocate? On the basis of standalone price. So TV 24,000 is my standalone price. So 25,000 is to be allocated among total price, that is 30,000 multiplied by 24,000. So my proportionate value of TV would be 20,000. And subscription cost me standalone 6,000. So this 6,000 is to be allocated in the ratio of standalone price, that is 25,000 is to be allocated in the ratio of 6,000 divided by 30,000. So my proportionate value which I will receive for my subscription model will be 5,000. So you see 25,000 is allocated on the basis of standalone price. How to recognize the revenue? TV is to be recognized immediately because control has been transferred. Whereas subscription revenue, that is OTT subscription revenue, or in Geo case, we can call it as a recharge. So subscription revenue is to be recognized monthly over 12 months because it is spread widely in the period of 12 months. So 416.67 per month is to be recognized revenue for subscription. Whereas TV, since the control has been transferred, the risk and reward also transferred to the buyer, it should be recognized immediately on delivery. तो 25,000 को हमने कैसे बांटा? हमने बांटा on the basis of matching principle and on the basis of identifying performance obligation and on the basis of transfer of control rather than transferring of risk and reward. What are the key takeaways? Revenue is always split based on fair value allocation and not just an invoice price. Revenue from TV is recognized upfront while subscription revenue is spread over the time. This prevents companies from inflating revenue upfront by recognized bundle payment incorrectly. अगर IndAS की जगह अगर accounting standard 9 यूज किया गया होता तो हमारा revenue 25,000 रिकॉर्ड होता. Since IndAS segregate the revenue, so हमारा IndAS कहता है 20,000 टीवी का रेवेन्यू है और जो बचा हुआ है वो आप एलोकेट करो ओवर द पीरियड बिकॉज ये सब्सक्रिप्शन सर्विस आपको महीने दर महीने मिल रही है. इट इज बीइंग प्रोवाइडेड मंथली बेसिस. So old standard would have recognized 25,000 on delivery, mispresenting subscription revenue. Scenario 5, hotel room booking with complimentary spas and breakfast, which we usually get. एक होटल बुक कराया जिसमें हमें कॉम्प्लीमेंट्री स्पा मिला, ब्रेकफास्ट मिला. द क्वेश्चन is hotel going to book all the revenue on the spot or they have to allocate depending on the performance obligation? A luxury hotel offering a 3-night package that includes room stay 15,000 per night. 15,000 per night. So 3-night packages, that means if I call it as an individual price, if I only book for room stay, so 15,000 multiplied by 3-night packages, 3 nights, 45,000 I have to spend to book a room. Complimentary spa treatment, standalone price 6,000. And since this is a distinct service, I can also take the service separately. So this is a second performance obligation, 6,000. Breakfast is also a separate service. I can take breakfast even though I did not book any room. So breakfast in itself is a separate performance obligation. So standalone price 3,000 for 3 days. That means 1,000 per day. That is 1,000 per day. If I calculate standalone price 45,000 for room stay, if I take separately complimentary spa 6,000, so 45 plus 6, it gives me 51,000. Plus, if I took 3,003 for breakfast for 3 days, so 45 plus 6, 51 plus 3, 54,000 would be my total services, the total value of services I am taking. But what is the package price? 42,000. So my question is, what is transaction price? 54,000 or 42,000? The transaction price is 42,000. So I have to allocate this 42,000 on the basis of three performance obligation or in the ratio of standalone price. And standalone price is 45,000, 6,000 and 3,000 respectively. So let us see. Identify the contract. Customer books and pays for 3 night stay packages. So this is my contract with the hotel. Identify performance obligation. There are three distinct services which I am assuming: room accommodation, spa treatment, one-time service, and breakfast provide daily. So transaction price is the contract price, that is 42,000. How I will allocate this transaction price? So for room, 42,000 divided by 54,000 multiplied by 40,000, 42,000. 35,000 is my proportionate value for room. Spa, 6,000 is to be allocated on the basis of standalone value, that is 4,667, and breakfast is to be allocated on the basis of standalone value, that I will get 2,333. So this is how, on the basis of different performance obligations, I've allocated my prices separately. How I will recognize the revenue? Room stay. Can I say room stay is per day? So recognize 11,667 per night for 3 nights. Spa treatment. This is 1 day treatment. This should not be allocated over 3 days because I am taking a one-time service. So spa treatment is recognized on the day of spa consumption, that is uses of spa services. Breakfast, this I am taking breakfast every day. So 2,333 is to be divided among 3 days, that is 777 per day for 3 days. So I hope you see the beauty of this IndAS. How much filtered way, how in what filtered way they have allocated, identifying the transaction price and allocating and then recognize the revenue. So this is IndAS 115. Then we have loyalty programs. I think this is the last scenario we have. Loyalty program reward points. And this is a good point. A customer stays at hotel and spend 10,000 for say. As a part of loyalty program, the hotel offers 10% reward point worth rupees 1,000 which can be redeemed on future stay. ऐसा कई बार हमारे साथ होता है. होटल कहता है आप सर आए हैं, एज अ लॉयल्टी बोनस वी आर गिविंग यू अ 10% वाउचर that whenever you come next time you will get a 10% discount for the same. Now, how IndAS treat this revenue? So there are two performance obligations. Hotel services 10,000 includes two performance obligation. First, hotel service room stay and future discounts through royalty points. How we will allocate this transaction price? We will consider this 10,000 includes that 10% which I am giving discount in future. So this 10,000 is actually equals to 110%. हम जीएसटी में वो करते हैं ना, इंक्लूसिव ऑफ जीएसटी, वो कुछ ऐसा ही है. हम ये मानेंगे कि ये 10,000 रुपए में वो 10% जो डिस्काउंट हम फ्यूचर में देने वाले हैं वो शामिल है. That 10,000 10% discount is inclusive in this 10,000. So how much room stay cost me today? It is 10,000 divided by 110 into 100. That comes to be 9,091. And the discount which we are offering for future is to be recognized now. So loyalty points 909, 900. So we have bifurcated this 10,000. 9,091 is my stay cost and 909 is my loyalty point which a customer will get when he book the room in future. So 9,991 recognized immediately on the day of stay, whereas 909 is to be treated as deferred liability or unearned revenue until the points they are redeemed. So the journal entry, bank account debit 10,000, revenue 9,091, and unearned revenue or deferred liability 909. And this liability will be recognized as an income when that discount is actually being redeemed by the client in future.
Mridul ji, can I interrupt? Mridul ji,
Yes, please. Yes.
please sum up within 2-3 minutes time if you can.
Yeah. This is the last
How
slide,
much
sir.
time would you like to have?
Only 1 minute more.
Oh, nothing like it. Nothing like it. Please, please.
Thank you, sir. Thank you. So
Audience,
what are
after that, we will have the 3 minutes time for question answer. Kindly
Yeah, sure.
mention your questions on the chat box, please, if you
Sure,
have.
sure.
Thank you. Thank you, Mridul. Thank you so
Thank
much.
you, sir. So last slide, so takeaway for hotel industry, bundle services, room plus spa plus breakfast required revenue allocation based on fair value. Loyalty point must be accounted separately as deferred revenue. This is the most technical point for hotel industries, and revenue recognizes based on when services are delivered, not payment is received. So I think transaction price we have understood that fixed price, then there is a variable consideration. So thank you so much. Let me check.
Just hold on, please. Yeah, question is there.
Sir, I'm not finding the question. Where is it?
I'm mentioning.
Yeah.
One question is there. Service has been provided, check has been received, but later on the check has bounced. So how can I account it?
So in
I
this
have
case,
provided the services. Services cannot be reverted back to me. It is provided online.
So, okay. So in this case, sir, since the revenue should be recognized because you have already performed your performance obligation, you have already आपने अपनी सेवाएं पूरी तरह से दे दी है.
बिल्कुल सर.
IndAS कहता है कि once performance obligation is satisfied, you can recognize your revenue. Since your check has been bounced in subsequent period, it is treated as irrecoverable debt or bad debts. So whenever your check has been bounced, it should be treated as a loss, operational loss for an entity, but revenue must be recognized.
Yeah. There is a separate, I think, regulations for bouncing check. There is separate law. They can sue for the bounce check.
Absolutely, they can,
Go for a legal proceedings for the bouncing.
Legal proceedings with the same, but since we are into legal proceedings, we have to fair value accounting estimates are there. अगर हमको लगता है कि केस जीतने की संभावना ज्यादा है तो हम उसको रिवर्स बैक नहीं करेंगे, लेकिन हमको लगता है द प्रोबेबिलिटी इज लो तो फिर हम उसको रिवर्स बैक करेंगे.
Reverse back.
तो जी, अकाउंटिंग ट्रीटमेंट सिंपल बात कहता है सर.
Right.
We have, as an individual entity, we have to identify whether there is a probable to receive my money back as a compensation, then I should record that compensation whenever it is realized. Unless we have to record as an operational loss. मुझे उसे bad debt treat करके एक बार उसको write off करना पड़ेगा.
Thank you so much, sir. Thank you, Mridulji, for being with us this evening, honoring
Thank
our
you so much.
request of CP committee and sharing your valuable views, taking our audience into the intricacies of the IndAS provisions of IndAS 115. Thank you so much, sir. Words are difficult to come by to express our deep gratitude towards you, sir. Thank you so much.
Thanks a lot,
A
Ratan, sir.
big thanks to you, sir. Thank you so much for being.
It's a privilege to be part of ICI webinar, and thank you so much, Ratan, sir, for such a mentor, such a guiding influence behind ICI.
Wonderful deliberation, sir. No doubt at all. Wonderful deliberation. You have taken our audience to the intricacies and a length. One question is mine, sir.
Yes, sir.
You talk about the real estate dealers when the hotel cases where the room is there, breakfast is there, and one more thing was there.
Spa services, the
spa
other
services.
recreational service. Yes.
The question is, if I don't take the spa services, but still I have to pay the for spa service because I am receiving the discounted price for all threes. If I don't take the spa services, if I don't take the breakfast, even I paid for them.
Yes, sir.
Then separately will be booked or only this will be treated as a room rent?
No, they will treat it as a different performance obligation. Because, sir, इसमें दो पर्सपेक्टिव है समझने के.
Right.
अगर हम एज अ बंडल सर्विस लेते हैं, कॉम्पोजिट सप्लाई, अगर मैं जीएसटी की लैंग्वेज में बात करूं तो अगर ये कॉम्पोजिट सप्लाई है जिसमें मैं सेवाएं चाहे लूं या नहीं लूं,
हाँ.
उन्होंने वो सेवाएं आपको दी है.
यस सर.
जैसे एक थाली है, हमारे
Right.
थाली में सब्जी भी आ रही है, रोटी भी आ रही है, चावल भी आ रहा है, सब आ रहा है, तो इट इज अ कॉम्पोजिट सप्लाई, वी कैन नॉट डिस्टिंक्टली आइडेंटिफाइबल। तो अगर मैं वो सेवाएं लूं चाहे वो सेवाएं नहीं लूं, उनके लिए तो वो एक कॉम्पोजिट सप्लाई है। दे विल चार्ज एज अ परफॉर्मेंस ऑब्लिगेशन, उनको तो रेवेन्यू बुक करना ही पड़ेगा।
Right.
लेकिन हाँ, लेकिन अगर मैं इंडिविजुअली रूम स्टे ही लूं,
Right.
तो फिर वो रूम स्टे का बुक करेंगे।
Naturally. ठीक है सर, थैंक यू सो मच प्रदीप जी।
थैंक यू सर।
Thank you, ladies and gentlemen. We have our wonderful speaker, another speaker, Jatin Harjai ji. Jatin Harjai ji has joined us. He is a learned chartered accountant. He has turned into the advocate after passing out chartered accountant. He is from Jaipur. Before I present you Jatin Harjai ji, I would like to brief you about the Jatin Harjai sir. Jatin Harjai ji from Jaipur, where I belong also. He'll deal us the latest Supreme Court judgments uh, regarding the GST and their impact to the professional and professional life. Jatin Harjai ji is a practicing lawyer, qualified chartered accountant, and is a certified anti-money laundering specialist. He is engaged in providing advisory and litigation services. He regularly represents clients before various judicial and quasi-judicial authorities, including tax tribunals, tax board, high courts, and Supreme Courts. He has a vast industry experience, including that of infrastructure, mining, real estate, construction, hospitality, online gaming, broadcasting, manufacturing, e-commerce, distribution, logistics, FMCG, automobile, exim trade, etc. also. He has addressed various industry forum, professional tax authorities in more than 900 seminars, workshop as faculty speakers on tax laws across India and abroad. This is brief about our next speaker, Honorable Sri Jatin Harjai ji, who will enlighten us and taken into intricacies of this latest Supreme Court judgment in the GST matters and their impact to the professional life and professional environment. I would request Jatin Harjai ji to please address our audience. Jatin Harjai ji, sir.
First of all, thank you, Goel sir, for the introduction. I must thank the committee, chairman of the committee, Satish Gupta ji, and whole of the members for being here, for having me here. Both things are here. So the idea is to discuss some of the Supreme Court judgment which are having a vast impact, not only on substantive provisions rather than other aspects as well. Can I ask for a tech support so that I can share my presentation on the issue? It says
Sir ji, please.
you cannot start screen share while the other participant is sharing. I think.
Yes, yes.
Mridul ji, kindly,
Okay.
yes.
Yeah, thank you. I'm
Mridul.
extremely sorry, Jatin ji.
Absolutely
Yeah.
fine.
Not a problem.
So before I start, I just on a lighter side, I can just recollect one of the quote which is said to be or linked with Benjamin Franklin, that in this world nothing can be said to be certain except death and taxes. This is what a very famous quote we hear day in day out, that taxes are certain and death is certain. Except these two, nothing is certain. But when I go through with this quote, in fact, if I try to correlate it with GST, I find it difficult because GST itself is not certain. We find it many a time that we see on a day in, day out basis, there are amendments in the GST. In fact, we all are fortunate to witness that it's such a dynamic law that it has witnessed two amendments in the same rule in the same day. That in morning there was a notification amending certain rule, and by the evening once again the rule got amended. So this kind of dynamic law we are handling, I must say. So, but now recently I heard this Rishi Sunak as well in one of the videos, whereby he was saying that having a lower tax, simpler, fairer, flatter tax system is something that can drive growth. Now, I'll leave it to the audience to have their own opinion as far as GST is concerned. How much it is lower or it is having a moderate tax rate as compared to the international precedents, etc., etc. How much it is simpler, how much it is fairer many a time, more specifically with respect to input tax credit when there is some error on the part of my supplier in filing of the returns, etc., or maybe delay in their compliances or non-payment of taxes. Flatter, I must say that there is no flat tax system in our country as far as GST is concerned. We are having multiple tax rate system. It is not only 4 or 5 tax rate. Rather, there are, if you go on counting, believe me, there are more than 38 tax rates under the GST law for different tax rate, because cess also gets contribute to it. So, in my humble understanding, it is not the GST which we envisaged in 2009. But maybe whatever we have, we need to deal with it, because we are also having a issue that we interpret a statutory provision on the basis of principles of interpretation. And by that time it reaches to the highest court of the country, it's a long time. Maybe 5 years, maybe 10 years, maybe 15 years has elapsed. And thereafter also there is no certainty, because many a time government comes up with a retrospective amendments to nullify the judgments if it doesn't suits to the maybe what the intent the government was having. So anyway, in this pretext, what I selected, there are 3 judgments which are actually impacting industry and professionals greatly. This very recent are the recent most is a Radhika Agarwal, which deals with issue of arrest under GST law. Then the other 2 are Safari Retreat and Bharti Airtel. Safari Retreat was much hyped, much talked about judgment from the Honorable Supreme Court. I have added one more from the Honorable Supreme Court, that is Bharti Airtel. That is also dealing with the aspects of the input tax credit. So what I'll do is, I'm not going to directly to the judgment, rather I will touch base the industry aspect first, so that we can formulate a question to ourselves and then see what kind of answer is coming from these judgments, or can we do some kind of restructuring in our client's case so that we can provide some kind of value addition to them? Can we optimize taxes? This is what a pretext of starting of discussion on these cases. Just to brush up, everyone knows that input tax credit eligibility comes from section 16 subsection 1. Once you are a registered person, you are using some goods or services which are for the purpose of the business or furtherance of the business, then you are triggered the eligibility. Then there are conditions for entitlement under section 16 subsection 2. You must, I'm assuming for our discussion that you are qualifying 16.1 and 16.2. Then there are blockages are provided in section 17 subsection 5. For the first 2 judgments, I'm specifically concentrating myself to the clause D of section 17 subsection 5, which talks about restriction of input tax credit when goods or services are used for construction of an immovable property. This is what the background of this context, that what we are targeting, what kind of restrictions are covered in this clause, and what these 2 judgments are suggesting us. Just you may take a example or a case study in your hand, that you got a client whereby client intimates you that, okay, I'm going to renovate my showroom, my warehouse, maybe my shop, whatever it is. And maybe renovation is going to cost you approximately 5 crore rupees. This is what a quotation has been given by the contractor. This work includes different type of different elements, maybe some sanitary fittings, maybe some lighting, switches, electrification aspects are there. Obviously, when you are going for renovation, some kind of demolition work would be there. Maybe some paints are there, wiring are there. Maybe you are also getting installed there, the IT network there, information technology network, some fire alarm, everything. Some cubicles would be there. Everything is there, which is going to cost you 5 crore rupee. This is a turnkey contract kind of thing. Your client is appraising. So he is asking you to advise him that can he optimize taxes, because in this case, what's going to happen if it is contract is going to be signed in this fashion, there would be a 5 crore plus 18% GST. This 18% GST would probably be cost of your client. That is 90 lakh rupees would be directly a cost to the client. Just now, with this background, with this facts in our hand, let's proceed to discuss what the cases we are having. So, or the statutory provisions, first of all. Section 17(5)(d), it starts with a non-obstante clause to the 16(1) and 18, that you'll not be eligible for the credit despite you are eligible and eligible under section 16 subsection 1 and you are fulfilling conditions of 16(2) if this input tax credit is in respect of goods or services. I'm concentrating on clause D, please. Goods or services are both received by a taxable person for construction of an immovable property other than plant or machinery on his own account, including when such goods or services or both are used in the course or furtherance of the business. So this clause specifically says, even if it is for the business uses, but if these goods or services are used for construction of immovable property, then no credit except when this immovable property is a plant and machinery. Fair enough. So then the law provides that construction includes this to the extent of capitalization. That means the law wants to convey that if you are not capitalizing, then it would not be covered by clause D or clause C as well, as far as blocking is concerned. Similarly, one just quick touch, I'm just quickly touching upon all these things. The plant and machinery definition, which is provided in the section itself, specifically excludes civil structures. That all kind of civil structure, land building or any other civil structure will be excluded from the definition of plant and machinery. That means the legislature wants to convey that even if the plant and machinery, even if whatever kind of civil structure is there, we will not treat it as a plant and machinery. Similarly, telecommunication towers. If there are telecommunication tower, we are not going to treat them as a telecommunication tower. This is what two deeming fictions are in the law. Now let's go to the first judgment of Safari Retreat. See, let me just touch upon what the facts. What were the facts before the High Court when they given this kind of judgment? What happened? This company was constructing a mall, a commercial mall, whereby they were intending to lease out the premises, lease out the different apartments or shop or showroom to a third person, and they are since they are going to lease them out, they are supposed to charge the GST on those lease rental and deposit it to the exchequer. Now the problem was when you read to 17(5)(d), it appears that it restricts the credit. If you are going to have buy goods or services for construction of the immovable property. So prima facie, it appears that this transaction gets covered in this exclusion, credit will not be available. Now the point was that the company argued before the court that what happens if, let's say, we are selling under the GST law, sale and rental or lease all are supplied together, and a person is supposed to pay taxes on all of them. Then why this kind of discrimination is there when we are going to pay taxes on our lease rentals? Then the credit is not eligible. Whereas if a builder constructs the commercial property, sells it to the third person, charge GST, and he is eligible for the credit. So this kind of distinction was there. This is what the primary argument was there before the Honorable Odisha High Court. And the plea was to declare the provision as ultra vires or alternatively read it down. This is what the contention before the Honorable Odisha High Court. There is an important aspect which I'll just touch upon and then park. Please have a look at the first paragraph on your slide. This is what the observation from the Honorable Odisha High Court, whereby they said that this kind of construction, that means if you are retaining the property, it is not for using your own purpose, but it is for letting out. This is what an observation which you may just note that it was there in the judgment of the High Court. Then we will discuss at an appropriate time. Once again, I'll touch upon it. Honorable Orissa High Court said that they has not declared this provision as ultra vires, because in that case, even the other situations, like let's say there is an office of a chartered accountant, they are constructing their office, maybe hit by 17(5)(d), but if this provision gets declared ultra vires, then despite the fact that I am not supplying any taxable services as far as building is concerned, the chartered accountant is not supplying, even then the credit will be eligible for want of 17(5)(d). So in that case, what Orissa High Court said, that we are reading it down so as to that if a person like this Safari Retreat, who is going to lease out the premises, who lease out the different apartments, and then you are going to pay GST on them, in these kind of situations, the credit will be eligible. So accordingly, Honorable Orissa High Court read down this provision to read in this manner. Now, this matter landed before the Honorable Supreme Court. Now, Honorable Supreme Court has given very, I must say, talked about verdict, whereby, first of all, the constitutional validity of 17(5)(c) and (d) were upheld, first part. Now, there is an interesting scenario which Honorable Supreme Court noted was that Section 17(5)(d) uses the term plant or machinery, whereas Section 17(5)(c) use the terminology plant and machinery. Please mind, there are two clauses, 17(5)(c), which restricts works contract. The other is 17(5)(d), which talks about goods or services procured for construction of immovable property. So 17(5)(c) is using plant and machinery, 17(5)(d) is using plant or machinery, and the definition clause under this section gives the definition of plant and machinery. So when noted this difference, Supreme Court came to conclusion we cannot treat this difference, we cannot leave in vacuum this kind of difference. Though it was argued from the government side that this is a clerical mistake, that in one of the clauses it remained as plant or machinery, wherever Honorable Supreme Court clearly said if that was a clerical mistake, it could have been rectified at much earlier point of time. So there are two specific provisions, two specific phrases used within one section, and one definition of one of them is provided. That means the other phrase has to be read in its own natural meaning. So for the purposes of Section 17(5)(d), you cannot refer to the definition provided in the section, which is that of plant and machinery. So precisely the explanation which excludes all kind of civil structure, including telecommunication tower, as I specifically said, those are to be out in the definition of plant and machinery, but not in plant or machinery. Now, with this kind of observation, Honorable Supreme Court disposed of this petition, saying that this is a matter of fact that whether a particular kind of building is a plant or not. If some building is in the nature of the plant, in that case, credit would be eligible. And if it is not, then if it is not getting covered under other exceptions, then no credit. So this is what kind of conclusion came from Honorable Supreme Court on this particular aspect. So this is what everyone knows. Now, what happened? There is another observation from the Honorable Supreme Court, which was less talked about, I must say. So this is very important, whereby Honorable Supreme Court discussed the difference between 17(5)(c) and 17(5)(d). What they discussed is there are two major differences in Section 17(5)(c) and 17(5)(d). First difference is the one which we have discussed, plant and machinery or plant or machinery. The other difference which Honorable Supreme Court has specifically noted, that 17(5)(d) talks about or restricts the credit when those goods or services are used on own account. Please recollect 5 minutes or 10 minutes ago, I just parked that phrase from the Honorable Orissa High Court side as well. What on Orissa High Court said, this is not for own purposes, own account. It is for leasing. Now, please mind that Honorable Supreme Court clearly said that if you are getting stuck in either of the exception, then you will be out of tax net. That means if you are if you are getting covered under plant or machinery, then you are out of exclusion. And even otherwise, if you are not plant or machinery, but you are a building, you are constructing a building, and building is not for own account, then also you are excluded from the exception. That means the credit shall be eligible. Now, one line is very important, which is at the bottom of this particular slide. Please have a look at the last slide, whereby Honorable Supreme Court says, construction cannot be said to be a taxable person's own account if it is intended to be sold or given on lease or license. That is what one of the key observation from the Honorable Supreme Court side. I'll come back to this observation also, maybe after 5 minutes. Let me just deal with what happened thereafter. Now, we are having amendment through the Finance Bill 2025. Having this judgment from the Honorable Supreme Court, legislature came to rescue of the situation, and they amended the law, treating it that was actually an error. The what mentioned in the 17(5)(d) as plant or machinery has to be amended as plant and machinery. Instead of plant or machinery, it is proposed to be amended as plant and machinery. Though from Lok Sabha, this finance bill has passed, but it is yet to be getting assent from the president. This is what my understanding as of now. So the day when it is implemented, the day when it is signed by the president, and after that notified, this amendment would be retrospective from the 1st July 2017. That is from the date of implementation of the GST. So that means one of the major observation on which the judgment of the Honorable Supreme Court was there, that there are two different phrases, plant and machinery or plant or machinery. That difference will go away, and both clauses will be having the same phrase, plant and machinery, which is defined in the explanation to mean that civil structures will be out of this purview. That is fine and fair. Now, my question comes, now my specific input comes here, that legislature is always deemed to be aware with what kind of judgment Honorable Supreme Court has passed. And this judgment came specifically to come out of what was the judgment of the Supreme Court in case of safari retreat. Please mind, Supreme Court has not, this legislature has not made any kind of amendment or any kind of new insertion is not there to nullify the impact of the para 32, which I shown you in the last slide, whereby they said, if you are let me bring this once again. If the construction cannot be said to be on a taxable person's own account, if it is intended to be sold or given on lease or license. So this paragraph or impact of this paragraph has not been touched by the legislature by any kind of amendment, meaning thereby this para or this conclusion is final, what the Supreme Court has said, and is the law of the land as of date, starting from 1st July 2017 till the time any further amendment is there. Now, please, I will not enter into that kind of discussion as of now, that whether a particular building or this building or that building would be treated as a plant or machinery or not. Let's leave that. Let's leave that. That's a Herculean task. But what comes out from it is a very important aspect is, if you are having a particular structure, if you are having a particular building and you are leasing it out, or you are having intention to lease it out, it will not be said to be on your own account, and then whole of the credit will be eligible. Precisely. Let me take maybe one or two examples. You are going to construct a hotel. There is a company X Limited which is going to construct a hotel. Let us say in between there is another company. If you are going to construct a hotel, probably you will lose out all the credits. Now, let's say there is another company, Y Limited. Now, Y Limited constructs the hotel, and lease out this whole of the property to X Limited. Maybe they are having on the day one, they are having an intention, or maybe they are having their intent document or MOU or rent agreement, whatever it is. Said that this property is being constructed to be licensed to X Limited by the Y Limited. So in that case, what's going to happen? In this case, what's going to happen? Y is going to charge license fee or the leasing charges from X Limited, on which he will be charging GST, and credit of the same would be eligible to X Limited. And simultaneously, this Y Limited would be eligible for the input tax credit as per para 32 of the judgment of Honorable Supreme Court. That means whole of that credit would get eligible. So huge implication on whole of this kind of industry. There are many issues. Very recently we have seen that in all areas warehousing has gone to a next level. So let's say there is a person who just constructed a warehouse which is leased to a company for their storage of their product. What's going to happen? In my humble understanding, as per this para, the credit shall be eligible. Credit of all the input services shall be eligible, subject to other exceptions if some are there. So will be eligible, and 17(5)(d) would not obstruct. They will not block the credit. Credit cannot be blocked under section 17(5)(d). That's what important outcome of this particular judgment. Now let me go through let me take you to the another industry or another aspect. Nowadays, when you are getting construction of buildings, maybe factory buildings, we have seen there are prefabricated structures. Now, unlike the earlier scenario whereby we are getting a masonry work at the site, when there is we are having those bricks, we are having sand, we are having etc. Laborers is there, they are constructing the building. Now, the recent trends are that there are a prefabricated structure which are being constructed or built at some different location, and they are being transported to the site, and with the help of some nut bolts or some minor masonry work, I would say, those prefabricated structures are getting installed there. Now, what kind of nature of these kind of a structure is? Can assessee attempt to take credit of this? This is what my second case study, I must say. In fact, this is all these are the very real case studies which we are receiving on a day in day out basis. Where one of the my client constructed a factory in one of the industrial area in Rajasthan itself, whereby they use this kind of prefabricated structure to construct their main building, which covers the which gives the shelter to the plant and main machinery. So question is whether the credit can be eligible on them. To give this background, let us just touch upon this statutory provision once again. We are aware that section 17 subsection 5 clause D will attract when these goods or services are used for construction of a movable property. Now, the second aspect which I want to use here is, let us say if some structure is not a movable property, that means it is a movable property. In that case, credit is eligible. Credit should very well be eligible. There should not be any doubt about it. Now, what is immovable? What is movable? GST law is silent on it. GST law says nothing about it. They says if it is, it only talks about that if it is capitalized to the extent of said immovable property, then the credit shall not be eligible. Now, General Clauses Act section 236 provides what is immovable property and what is movable. They are inverse. Immovable property is defined to include land and benefit arising out of land. What is benefit arising out of land? Development rights, easement rights, all these kind of rights which emanates from the land itself that are included. And please mind, things attached to the earth or permanently fastened to anything to the earth. So precisely, if we go to the immovable property, it gives a sense, definition of immovable property in General Clause Act gives a sense that the things which are attached to the earth, which is permanent in nature, and like earth itself. This is what Honorable Supreme Court has explained this aspect in multiple cases. I'm just touching upon one or two, then I'll come to the latest judgment. In case of Sirpur paper mill, Honorable Supreme Court, when they were analyzing whether a paper mill, whether a mill or a machine which is attached or embedded to the earth and maybe fastened with the nut and bolt and minor machinery work, can it be said to be immovable property? Honorable Supreme Court says no. It cannot be said to be immovable property. If you read this underlying things which is there on this in the slide itself, it is not possible to hold that machinery assembled and erected by the appellant at its factory site was immovable property as something attached to earth like a building or a tree. So they were also referring to the provisions of General Clauses Act as well as Transfer of Property Act, whereby they took a interpretation that immovable property would be the one which is attached to the earth like a building or a tree. That means must having a nature of permanency which cannot be removed without a substantial damage to it. This is what the specific aspect. Supreme Court clearly said that if for the operational efficiency or the operational purpose something is attached to the earth, it does not mean that it is a immovable in nature. They've even given an example that let's say you are having a pump, water pump, and if it is affixed to some kind of a structure with some maybe some civil structure or nut bolt, in that case it is for their operational efficiency and safety. They does not just become a immovable property just because it is placed at the immovable structure or maybe fastened to that. So that will remain the movable property. There are multiple judgments, so I'll just, I think I'm leaving this one. Coming to the controversy which in which this judgment of Bharti came. Firstly, this judgment it came from the High Court, when in the Bharti Airtel versus CST, Honorable Bombay High Court said that with respect to prefabricated structure, we all are aware when these telecommunications companies provide services, they are having their tower. Wherever they are having tower, along with the tower, there are some kind of a structure is also there, which is actually a place whereby one places there some equipments, machines, some small machines are placed inside that. Many a time it happens, maybe a watchman or a person can also sit there. This kind of structures are there. So in those kind of facts, Honorable Bombay High Court said that whole of the structure cannot be said to be a single unit and cannot be given benefit of input tax credit. So they identified some immovability aspect in the prefabricated structure. On the contrary, Honorable Delhi High Court in 2019 in Vodafone's case, they said that entire tower, this whole tower, which is actually a shelter to some of the equipments, these are being supplied in the semi-knockdown or maybe completely knockdown situations, conditions. So they are merely attached or fastened to the civil foundation which were already there. So that means if someone wants to remove it from there, one can remove it. Excuse me. So the essential characteristic is movable. Again, they analyze the same task, that if something can be moved from one place to another or from a place of installation where we are looking at it, if it can be removed without substantial damages, in that case, it cannot be said to be a immovable property. Rather, it has to be treated as a movable property. And in that case, Honorable Delhi High Court distinguished from the Bharti Airtel judgment of Bombay High Court. Thereafter, the matter was analyzed by Honorable Supreme Court very recently. Now, Honorable Supreme Court has specifically identified that these all aspect has been discussed. And again, the same principle has been approved by the Honorable Supreme Court, that if something can be moved from one place to another, it cannot be said to be a permanent in nature. If there is a substantial damage, in that case, that's a separate situation. But if something can be moved from one place to another, possibly, it cannot be said to be a immovable property. One very important aspect is also there, which one has to note it down, that please mind about telecom tower. When we are having this kind of judgment from this, whereby the Honorable Supreme Court clearly said that tower is in the nature of movable. On the contrary, if we will have a look at Section 17, subsection 5, and then the definition of plant and machinery provided there. and plant and machinery specifically exclude telecommunication tower. Now, please reconcile these judgments and the legal position, which comes to clear that even if for the now, even after this judgment of Safari Retreat, the plant and machinery definition applies to 17.5D. But even then, there are two specific exclusions. One exclusion is if something is not on his own account. That means this 17.5D restrictions trigger when the construction is on his own account only, on own account of the assessee. Secondly, the plant and machinery, if the immovable property is plant and machinery. So these two exclusions are parallelly going in their own way. So if, let us say, telecommunication tower is plant and machinery as per section 17.5 explanation, even then, if it is movable, the credit shall be eligible. So now let us recollect the two examples which I took. Number one, a factory building, a factory which is maybe having some kind of silos, which is maybe a plant, maybe some different structure, which is to shelter the machinery. If they are movable, can there be restriction under section 7? Can restriction under section 17.5D would apply? I have my own doubt. In my humble understanding, the restriction will not apply. I quoted another example. I took another case study. The first one, that you are having a client which is going to renovate or reconstruct its maybe showroom for a 5 crore rupees, and which is having a different element. And maybe one preposition is that, okay, turnkey contract is being given for whole of the contract, 5 crore plus 90 lakh would be the cost, chapter ends. Now, then you may come and you may explore what items are there which are movable in nature. If you want to have a separate inward supply, separate contracts for supply of goods or services, and you can identify and fit those inward supplies in a different exclusions, probably you can save, you can optimize your taxes, I must say. I just want to conclude from my side that the applicability of section 17.5 clause D or restrictions provided in 17.5D, I just want to explain in this manner that let's say you are going to construct something and this construction is not capitalized. In that case, please mind ITC is eligible, because there is a general presumption the moment there is some civil construction, the moment there is some kind of construction activity, normally people are not taking any input tax credit. So I just want to explain the legal position in my humble understanding through this flowchart. If there is a construction and construction is not capitalized, you are eligible for input tax credit. For example, you have you have got your office repaired. In repairing, there may be some kind of the tiles are being, old tiles are being removed, new are being installed, some interior works are there, but they are not capitalized. In that case, ITC eligible. Number two, let us assume it is capitalized. Now what's going to happen? The capitalized items are having nature of movability. Now, what is movable? What is movable? We have discussed in great detail, and Bharti Airtel is a judgment which gives crystal clear picture to so many things. So now let's say in a showroom, you are having furniture. Most of the furniture is movable. You have some equipments, though it is capitalized, but maybe it is movable. So many things are there which are having movable, maybe some machinery, maybe some equipment, maybe AC in your office. Many a time people think that, okay, AC, can it be removed or not? Yes, AC can be removed from one place to another. Why not? Similarly, recollect that example of building. If some prefabricated structures are there and which can be moved from one place to another. In fact, the contract which I was examining a couple of months ago, just before this judgment came, what I was analyzing is, in fact, in my client's case, there was an agreement. It was a lease premises whereby the prefabricated structure was used to construct the building of the factory. So in that case, in the contract itself, the condition was there after this much period. It was 4 or 5 years time. The supplier will help him or assist him from shifting this building, this prefabricated structure from this plant to another plant. which gives a very good evidence to say this is this is not only this is movable, rather it is intended to move from one place to another place. So the moment that building is movable, it is out of purview of 17(5)(d), meaning thereby ITC eligible. Now let us say something is capitalized and is not even movable. That means it is a immovable property. Now the resultant thing, if resultant thing is a plant and machinery, for example, let's say there is a machine, the centralized air condition system. Many a time we see, okay, no, it is like capitalized or some civil permanency is there, whatever it is, whether it is a machinery or not, whether it is a plant and machinery or not. If something is plant and machinery, irrespective of the fact whether it is permanent, whether it is immovable, whether you capitalize, credit is eligible. So in that case also, credit is also eligible. Now let's come to the another leg. Now let's say we are in a situation that even the resultant subject matter is immovable, capitalized in books, and even it is not a plant and machinery. Then also please examine whether you have leased it, it is intended for sale or license. In that case, as per judgment of this Safari retreat, ITC shall be eligible. And if it is not the case, then in that case, ITC is not eligible. So one has to analyze all these aspects. I can tell you with my experience, just I have given the example of that 5 crore renovation work for 5 crore rupees of one of the showrooms. I can tell you, by the bifurcation of the contract and proper structuring, you can at least save 70 to 80% of the costs on account of taxes from this kind of plan. So this is what I take away from this. Now let me come to the another judgment from the Honorable Supreme Court, which is a celebrated judgment as far as on the aspects of the arrest under the GST law. In fact, this judgment was filed. These petitions, which were in a bunch, were filed for the customs and GST purposes. If I'm not wrong, approximately 279 or maybe 280 petitions were there, which is the batch size which was disposed of. I was fortunate to present my cases in front of Supreme Court in this case. So please mind, earlier there was a different batch. Then the batch was designed for customs and GST. PMLA, earlier the cases were attached to it, but now there was a separate batch for it. Anyways, so couple of aspects which were discussed. Number one, Supreme Court uphold the legislative virus. That means they are constitutionally valid provision as far as arrest provision under the GST law is concerned. If I'm referring something in this, in maybe a couple of 2-3 slides as far as custom officer is concerned, please mind equally applies to GST as well, because the way the judgment was wrote by Honorable Chief Justice, it was like that they discussed everything about custom. Then last they said whatever we discussed about custom will squarely apply on GST as well. Specifically with respect to GST, they said, okay, not in every case the arrest would be there. The reproduce or I must say re-emphasize the statutory provision. The arrest can be there only and only when the alleged evasion amount is more than 5 crore rupees and when the allegation falls in 132(1)(a), B, C, and D. That means if there is the 4 allegations are there, like number 1, clandestine removal. Number 2, when there is a bill but there is no actual supply of goods, you can say fake invoice cases. Number 3, credit taken on the basis of those fake invoices. Number 4, you have collected tax on the name of the government and has not deposited. These are the only 4 offenses, and when these 4 offenses having a magnitude of more than 5 crore rupees, then and only then the arrest powers are there. We are not saying that arrest has to be there, but power to arrest comes into picture only and only in those cases. All other cases, the arrest power even doesn't arise. So this is one aspect. We all chartered accountant has seen so much discussion about reason to believe under the income tax law. Similarly, or rather more rigorously, I must say, as far as this arrest is concerned, in GST law, arrest is done on the satisfaction by the commissioner. Honorable Supreme Court has specifically said that satisfaction has to be based on the materials. No, it cannot be mere suspicion. The material finding has to be there. You must record your reasons, that yes, reasons exist of evasion or of this. Quoting the material, what kind of material you are having. It cannot be a vague or bald satisfaction. There has to be a material to show. Next aspect, which was there with respect to that custom officers are not the police officers. So protection under 25 of Evidence Act will not apply. Similarly, magistrate, this is an important aspect. We normally see that the moment the GST authorities arrest, the court sends them to the judicial custody. Hereby, Honorable Supreme Court has specifically noted, if in an appropriate case, magistrate can authorize detention of such person by the custody of the custom officers, meaning thereby, if they want, they can have the custody of the person as well for getting some interrogation kind of thing. Now, there are some aspect, I must say, the Honorable Supreme Court has declared the provisions as intra-virus. It is not ultra-virus. But there are so many aspects in this judgment which Honorable Supreme Court has noted, and that as a right of the taxpayer, or maybe duties of the officers while the exercising the search, this arrest power. Those are the important one I was enlisted here. First of all, case diary has to be maintained by the officer. Case diary is normally we all people know as CD. CD word is being commonly used for it. So just like police officers are maintaining CD, CD is a basically record whereby all and each and every movement are being recorded in writing. So it has to be duly paginated volume wise, number wise, and all aspects has to be recorded, so that tomorrow if someone goes to the court to challenge the arrest, in that case the court is having the record of the arrest and everything is in black and white in front of the court, so as to enable the court to decide appropriately whether the procedure, whether the law has been followed appropriately or not. Number two, ground of arrest to be communicated to the arrestee. Not only ground of arrest, rather reason of arrest are also to be. These are two separate things. Meaning thereby, it is not like the officers are going to intimate that, okay, ground of arrest is you have issued a fake invoice or you have taken input tax credit on the basis of fake invoice. No, it is not sufficient. The reason to believe must also require to be disclosed to the arrestee. This is what Honorable Supreme Court has said, which followed the judgment of Arvind Kejriwal in the case of Prevention of Money Laundering Act, which was a recent one in judgment. So that a person who has got arrested gets to know actually on what basis they are making an allegation, so that he'll be able to appropriately challenge the action by the department before the appropriate forums. Now, the right of the arrestee is that he can meet choice of his advocate, number one. Number two, during the interrogation time, an advocate or authorized person can be present in the maybe at the time of interrogation. Advocate can be there, but please mind there is a catch that the advocate can be there at a visual distance, that the advocate can see or authorized person can see the arrestee, can witness the proceeding, but he must be at a distance so that he cannot hear what kind of discussions or questioning are there with the fellow. So must be within visual distance, but must be out of the hearing distance. So this is what it is the or settled preposition which has been reiterated at one place, I must say. So judicial, that this is also important, that judicial review of the arrest is permissible both before and after criminal proceedings or prosecution or complaints are filed. That means if a person is being arrested, and even if there is a no formal complaint or maybe no formal show cause notice are there in those, or no formal case is being made, in that case also the judicial review of the arrest can very well be there. That means you can go and try for the bail. And even otherwise, the procedure can also be verified in the by the courts. Important, the arrest has to be made on the basis of concrete finding, which are recorded by the commissioner, as I have already discussed, that there is a breach of Section 132, 1A, B, C, D read with Section 69, meaning thereby these offenses has been committed and there is a evasion of 5 crore plus. The arrest has to be made only after that. Arrest cannot be made to identify or to diagnose whether this kind of breach is there or not. No, arrest cannot be there for it. That, okay, we are going to make arrest, then we will investigate whether these things. No, arrest is not permissible in those kind of scenario. Then we all are well aware that if there is a benefit of doubt, that is, if there is a dicey situation, that means if the material which is there in front of commissioner or in front of the magistrate, that, okay, there may be a two possibilities are there. Okay, this person may have committed this offense or may not commit it. In all those kind of situations, the benefit of doubt will go to that person. So in meaning thereby, whether it is a commissioner who is going to issue arrest warrant, or whether it is a magistrate who's handling adjudication of the bail application, if there is any doubt, doubt has to go to the person who has got arrested. Then we have already seen this aspect that in disguise of Section 74(5), whenever there is a search, in case of search, the voluntary, so-called voluntary payment is made during the search itself, which Honorable Supreme Court has said is specifically not permissible. Court has specifically instructed CBIC to formulate clear guidelines so that the arrest threat cannot be there to recover the tax. And in fact, if there is any kind of threat, maybe of arrest or maybe under other kind of coercion, if the amount is deposited during arrest, in the during search and seizure, or maybe this under arrest threat, the assessees, those persons are entitled, are rightful to move to the High Court to get a refund of that amount. This is what has been clarified by the Honorable Supreme Court, though this aspect has been handled by so many high courts. I must say that almost all high courts of the country, the leading judgment, if you want to refer, that the bundle technology was a very good judgment from the Honorable Karnataka High Court. That was a Swiggy case. Nandidal was one of the very good case. Another was the deemed distributor from the Honorable Telangana High Court. Those are the leading judgments, but this is coming directly from the Honorable Supreme Court side, that it is not permissible. And if in these kind of circumstances, amount has been deposited, then the assessee would be rightful in going to the court to get the refund of it. One last aspect with respect to the bail, then there were some issues whereby the anticipatory bails were denied to the persons on for want of a formal FIR. Honorable Supreme Court has specifically clarified that filing of an FIR or registration of the case or non-maintaining of the diary or maintenance of the case diary cannot be a prerequisite for an anticipatory bail. So that means even if there is no FIR, then also you can, on a reasonable apprehension, you can go to the appropriate court to get an anticipatory bail, 438, 439 of the earlier law. So in that case, you can file for an anticipatory bail. And in appropriate cases, the courts, considering all the aspects, can grant the anticipatory bail in the GST cases as well. So this is what I understand. There are 3 judgments which I discussed are useful. Maybe first were on the substantive law of the input tax credit. The another Radhika Agrawal was in relation to the maybe proceedings which are made by the GST authorities. With this, I conclude my session. I once again thanks to the committee for giving me this opportunity so that I could share some of my thoughts on these issues. Thank you. Thank you very much.
Thank you so much, Jatinji, for giving insight to the recent case laws and recent ITC legal positions. There are 2 questions in the chat box I would like to mention here. One is they want to know about the meaning of capitalized under the GST Act. Is there any different meaning, or is there meaning for the capitalization of the expenditure? How do you
GST law GST law does not define the capitalization.
Yes.
So what in accounting sense we understand capitalization has to be treated like this. That's it.
If it is added into the
it is used at 2 places.
Added into the fixed asset, then it means to be capitalized.
Yes, you are right. But apart from that also, there may be a capitalization other than by the fixed asset as well. Meaning, lightly or in a layman's term, I would say, if you are taking those payments to the balance sheet instead of P&L account.
Right.
That means
Right.
whether it is in fixed asset or maybe some kind of different classification is there in the balance sheet. But the ultimate ideology is those kind of expenditure or the supplies are for enduring benefit, not for a limited period, which for which you are claiming an expenditure or being revenue. It is not treated as a revenue expenditure. That's it.
Absolutely fine, sir. Another question is which you have already replied, whether anticipatory bail can be applied. Yes, you have already
Yes, sir. That was the
talked
last
about.
point.
Yes.
Probably the person who has asked might have asked before I took that issue.
Yes, yes. Extremely useful session. Yes. Nice presentation, sir. Thank you so much, Jatinji sir, Mridul sir, for being with us, showing your concerns to our profession and professional, sharing your views. If word alone can express our deep gratitude towards both of you, we would like to say a very, very, very big thanks to both of you, sir. Thank you so much. Thank you so much for being with us. CP committee is indebted for honoring their request to be here and to enlighten our audience. Thank you. Thank you so much, sir. We are ending. Now we are ending this webinar. Thank you so much. Sorry, sir. Thank you.